What's up, edge traders? This is Adam Winnig here, and in this video, I'm going to show you one of the easiest Forex trading strategies for beginners, and I'm going to break everything down for you step by step. Yes, this is a strategy that actually works, and at the end, I'm actually going to go through and show you several examples, so that way, if you're a beginner, you can understand the strategy, you can learn it, and you can actually start using it in the market to start making money. What's going on? It's Adam Winnig. In this video, I'm going to break down the easiest Forex trading strategies for beginners, and I'm going to break it down for you step by step. If you're new here, consider liking and subscribing because we built this whole channel to help make your trading easy, lucrative, and fun. So let's go ahead and let's get into the easiest Forex trading strategy for beginners, and I'm going to break this down for you step by step. Okay, first things first in this trading strategy is that you need to trade either on the H1 or the H4 time frame. With the H1 time frame, obviously every candle is representative of 1 hour. On the H4 time frame, every candle is representative of 4 hours. Now, a lot of people are impatient, so they'll like to trade the H1 time frame. In my testing, in my trading, I've found that the H4 time frame is actually more accurate, but you'll have to sit on your hands a little bit longer, which a lot of new traders can't do. So we'll just look at it on the H1 time frame in this scenario. The second thing, which is probably the biggest piece of advice that I could give to new retail traders or beginner traders, is to trade contra crowd. Now, in the Forex market, there's two different parties trading. There's what's called the herd. This is all of the retail traders. And there's what's called the smart money. And this is the institutional money. Now, the herd, generally, you've probably heard the statistics, 95% of the time is actually wrong because they have these poor psychological behaviors. And the smart money is right the vast majority of the time, since they're taking the opposite side of the retail trade. So all of that to say, basically what you want to do is you want to trade contra crowd. And what this means is you want to look at what everybody else is doing, and we basically want to do the opposite. If we know that most people are failing, then we want to do the opposite, and the chances are we'll line ourselves up for success. The thing about the contra crowd is this. So you can see really easily displayed here is you can see that the herd is 80% short. Okay, even though the market is clearly in an uptrend and the herd is only 20% long. So we know that the herd is mostly wrong, and since they're trying to short the market, we're going to go long. So we just basically want to play in with this smaller number. So first thing is we want to trade on the H1 or the H4 time frame. Second thing is we want to trade contra crowd. Okay, this will automatically align you with the smart money. Now, I use this simple little indicator called the bank secret indicator. In this strategy, you don't have to use this indicator. You can find this data also available on myfxbook.com/community outlook, I believe, to see the overall market sentiment. So again, you want to be trading against what the herd is doing, okay, or contra crowd. The next thing that we want to be doing is trading with the direction of the trend. The trend is your friend, and if you just trade with the trend, you're going to have better risk to reward ratio, and you're likely going to catch more wins than losses. So with that being said, how do you determine the direction of the trend? Well, it's really pretty easy. I mean, if you look at this chart and you look at it right here, what would you say? Is this going up or is it going down? It's going up, right? It's making higher highs, it's making higher lows, higher highs, higher lows, right? And that's an easy way to do it. Another way that you could simply do it if you want to be more technical about how you find the direction of the trend is you can go in and you can pop on, say, a moving average like this, for example, and let's say you want to pop on the 20 moving average, and there you go. And you can see since price is above this line or this moving average, this is considered to be an uptrend. As you can see in a downward trend, you can see that obviously the candles are below the moving average. Now, I use, again, this thing called the bank secret indicator, which you don't have to use. You can try it out for free on our website for 7 days if you'd like to, but I like this because it shows me on each time frame what's happening. So I know on the M1, it's an uptrend, M5 uptrend, 15 minute, minute 30, and H1, it's all an uptrend. On the H4, it's a downtrend, and then everything else is in an uptrend. So I like to do this. I like to trade with the trend. This is a really easy way to see it. Okay, so recapping, trade the H1 or the H4. Next is we want to trade contra crowd. Next is we want to trade in the direction of the trend. The next thing that we want to do is we want to look for key support and resistance zones or key zones or areas of value where price tends to bounce off of a lot. Again, I'm using the bank secret indicator, so it makes it easy. It shows the zones here, but you don't have to use that. You can obviously just draw your own support and resistance zones. This is kind of support and resistance is basically where price tends to move off of quite frequently. So if you were to go back in time and you're to actually look at this, you could see that this key zone that the bank secret indicator has pointed out for us, it's been a key zone. As you can see, it's bounced kind of off of this zone several times. One here, bounce off, two here, bounce off, kind of bounce off here, and now it's bouncing off again. So it's a key support or resistance zone that we'll pay attention to here. And we only want to take trades when they're actually at a key zone, because this is where you're likely to get these sharp movements off of the zone. And then the next thing is we're just simply looking for some sort of momentum candle or some sort of candle that signifies that it's going in the direction that we want it to go. So again, basically we're looking at H1 or H4 trend. We see that we want to be contra crowd. The herd is short, so we want to be long. We see that the market is clearly in an uptrend here. And then we're just looking for some sort of momentum. Okay, here's a key zone clearly here. And we just see a momentum candle. Now, what does that mean? We just see that there's a pretty big size candle. This happens to be an engulfing candle where it's bigger than the previous candle. And this is pretty good sign that there's momentum heading off here. For example, these little baby candles right here where it's kind of consolidating, I wouldn't call those momentum candles. So I probably wouldn't trade those, but I see that this one's got a nice big fat body going in the direction that we want it to. So this is a nice entry for the trade. Okay, so those are all of our entry criterias. Now, as far as money management and where to put your stop loss and take profit, let's actually take a look at that for a second. So there's a couple ways that you can do this. Before I say that, I'll say that we analyzed 43 million retail trades, and we found out that the power in having a 1-to-1 risk ratio is really, really powerful, meaning that if you risk 1%, you'll gain 1%. At least having that ratio. If you have a 1-to-2 or a 1-to-3 where you're risking 1 to make 2 or risking 1 to make 3, that's even better. But at least having a 1-to-1 risk to reward ratio will give you a 73% higher likelihood of becoming a profitable trader. So it's really, really key that you use at least a 1-to-1 risk to reward ratio. Now, with that being said, where do we put our stop loss and take profit? Well, a great place to put your stop loss is right below the zone. Okay, so you could do that, and then you could put your take profit up at the next zone, or you could also put your take profit at a 1-to-1 or a 1-to-2 or say a 1-to-3, whatever you want to do. And obviously you're going to want to test your system, but that's the basics of where to put your take profit and put your stop loss. Okay, so let's recap and then let's take some trades together. Okay, step number 1 is we're looking on the H1 or the H4 trend. Step 2 is we're trading contra crowd. Step 3, we're trading in the direction of the trend. Step 4 is we're waiting for a key zone or support and resistance to be in play. And then the next step is we're looking for some sort of momentum candle. We're using at least a 1-to-1 risk to reward ratio. And then we're also just waiting to see, this big momentum candle. Okay, so with that being said, let's look at a couple. Obviously, we can see here, this is clearly in an uptrend. We see the area here. This is a key area here, and we see momentum coming off here. So basically, boom, we'd want to enter right here. We could put our stop loss below the zone, 1-to-1 risk to reward ratio, or 1-to-2 or 1-to-3 even in this scenario. Okay, let's take a look at a couple more examples, and then I'm going to show you the most important part of this system, which is actually the money management system. So stay tuned for that. Okay, next, let's look again here. We can clearly see that the herd is short, so we want to be long. We want to be contra crowd. And here we can see that clearly it's in an uptrend with all these blue trend bars here. And then what do we see here? We can basically see that here, if we zoom in here, we can see that it's clearly in an uptrend. We can see it's pulled back to this area of support right here. And we kind of have these baby candles, and then boom, we get 2 candles in a row. So that's kind of a sign of momentum, or maybe you wouldn't even get in until this big candle right here, and you'd still be able to play it out in your favor. Now, you'll see this playing out all the time in your favor when you start using the strategy. This is Euro GBP. You can see it playing out here beautifully as well. The herd is mostly long buying, so we want to be short. We can see it's in a downtrend from H1 to the daily time frame. You can see here is at an area, a key zone. So you can see this right here, this momentum candle. Put your stop loss above the zone, and boom, you could write it down to all the way here. If you stayed in the trade, you could keep writing it all the way down. Another example, okay, it's clearly in a downtrend. We see this big momentum candle here in white. Okay, we can enter right there. Boom, we'd stay kind of in the trade for a while in this scenario, and then boom, it just drops beautifully for us, right? So there's the idea. And again, right here, same thing. It's in a downtrend, trading contra crowd. You see this white momentum candle right here. Bam, it's starting to come down here for us beautifully. I'm going to look at a couple more together, and then I'm going to show you the most important part, the money management. Here we can clearly see it's in an uptrend. You can see that the herd is mostly short, so we want to be long. And you can see this just playing out beautifully once again. Right here, you see it came into this zone. You see this big momentum candle coming out of here. Boom, great place to buy. Another place right here, you can see there's a key zone here. Big momentum candle coming out right there. Boom, great place to buy. Okay, 2 more, and then we'll get into the money management strategy. Okay, you can see that the herd is mostly long, so we want to be short. We can see it's clearly in a downtrend, and then we're just waiting for some sort of momentum. We can see a momentum candle right here coming out of the zone. Beautifully could have rode this down, as well as right here at a zone. We can see momentum candle right here come on down. Okay, Okay, same with right here. It just looks like it's forming. Last one, and I'm going to show you the most important part of this, which is the money management strategy. So what are we seeing here? The herd is mostly long. We want to be short. We can see that it's clearly in a downtrend. I mean, just look at it. You can see here with some baby candles, maybe you really wouldn't enter until this candle where you got some pretty good volume coming through, momentum coming through, and boom, enter it, take it all the way down. Again, here coming up to a key zone downtrend, you see this big momentum candle, boom, take it all the way down. Okay, so that's how the trading strategy works. It's really, really simple. If you want to use the bank secret indicator, you can. You don't have to, obviously, but you can try it for free on our website for 7 days. Now, the most important part of this strategy is the money management strategy. And this is a little concept that I like to call asymmetric compounding. And it's so powerful. It's like an edge within your money management strategy. It can pretty much take any type of trading strategy and it can either make even unprofitable strategies become profitable. And it can also take profitable strategies and make them even more profitable. And it's so simple to do and it's so easy, and yet it can make a huge difference in your profitability. So I'll leave a video card right here. Click on that video so you can make sure that you watch the most important part of the trading system, which is the money management. So go ahead, click that card right now and watch that video.